Are you feeling the pain, the anguish, the panic, the loss? Well, if you are, you're not alone. And this is not the only asset class that's suffering this. Right now, we're seeing pullbacks across the stock market, commodities, bonds, and cryptos. So forgive my basketball hair, but this is an update on Dash. We're going to go over not just Dash, but some of the other altcoins, as well as other asset classes, just to give you an idea of where we are. Now, these charts are available in the description below, so look for the links down there if you'd like to check those out more closely on your own. But this is the Dash 30-minute chart. We were looking for some more downside action. I went over this in my State of the Cryptos update that I believe I published on Friday, and I haven't really changed anything since. So far, we seem to be following through on the downside we were expecting. So again, the blue pattern that we saw here got invalidated as soon as we broke 45.53. Actually, it would have been a little bit lower than that, I think 43.79. Regardless, we broke the blue pattern, so that will come off the chart. As a matter of fact, I might as well delete it as we're here right now. So that's gone, as is this and that and that. And this is not a wave two. So red did come through, and it turned out our 1-2 setup was down here, not here. So that goes away as well. And this means that this entire rally has been a big B wave, or I'm sorry, a fourth wave fake out. So this 4 is actually presumably topping here. And this was our actual third wave down of our big pullback. And therefore this bottom is the actual wave 2, or not wave 2 in this case. Actually, it could be a wave 2. We're going to look at that in a big picture chart. You'll see why I'm a little ambiguous on what's going on here. But we got our 5 waves down, and sometimes we don't get exactly the form we would expect. So you got our 1, 2, our third wave actually did hit right into our zone, right at the 1.32 extension. We had a tiny fourth wave bounce, and then we had a flush down to almost a 2.0 extension. So our official bottom looks like it's right at about 38.64 or so. And therefore, we are very likely done. Does that mean for sure we're not going to have a little lower low? We could have a marginally lower low, but this does have that full impulsive look. And we're seeing the same kind of action across other cryptos as well. When we look at Bitcoin and Ethereum, same kind of thing. We had some follow through, although Bitcoin's structure is not as clean looking. It has a bit of a warped downside. I think I was talking about this, how there wasn't a very complete looking 1-2 setup in the first place. Ethereum, on the other hand, really followed through nice and hard. And just like Dash, we hit just about the 2.0 extension after we had our third wave presumably up here. So I'm making these adjustments just to fit what we've seen. And it looks like we may be done. When we look at our MACD, there is a divergence, a very sharp divergence for sure, at least in those two. Look at Bitcoin Cash, same kind of thing. I know I don't have the full nomenclature here, but shifting back to Dash, which is our main coin that we are analyzing, we do have a divergence. So again, we have a lower low, but the MACD did not get stretched any lower than that. So right now we have enough to consider this done. The bounce ever since could be impulsive. We may be having some kind of fourth wave with a fifth wave coming, or maybe we have a little bit nominally lower, not totally clear, but so far it is following through. So while this was happening in the crypto space, we've seen a lot of bloody action in the stock markets too, a lot of panic. I'm pretty sure just about every YouTube finance guy I follow, or at least watch, has was telling you to sell. That's a good time to not sell because, well, they get clicks. They make a lot of money off of getting more views. So they're going to tell you whatever your subconscious mind wants to hear. So this is the worst time to sell. Now, I'm not saying you have to go and buy the dip, but selling here is very dangerous. This is the Dow. So we did get a lower low, and therefore we have reset our entire upside structure, which is actually a relief from an analytical perspective. I don't think I have drawings on this particular chart because I'm actually not on the right chart. Let me reset here. Okay, so this is the Dow up close. And if I zoom out, you guys will get an idea of what I'm talking about here. We had a nice promising rally setup where we had a possibly 1, 2, and a 3 and a fourth wave, but then we went right down. So this is best identified as an ABC up. And because we've had a lower low, now we can actually reset the count from here. So this would have been a pretty pathetic upside projection anyway if we did get our fifth wave up from here. This is going to make things a little better, less ambiguous. But again, enough with stocks. This is about Dash specifically. So again, looking close up, we have what looks to be a completed impulse down for our C wave to finish this leg of the pullback. So where are we big picture? This is the logarithmic daily chart, and I have heavily rebuilt this thing. I actually tore everything down in terms of nomenclature and labels because it was kind of getting messy and ugly, and I've actually rebuilt all these labels. And well, here's where we are. We have not broken our major support yet. That sits at about $34.20, maybe 34, 33, wherever that is. It's a little hard to see from zoomed this far out, but that major support it's still being respected. We haven't broken it yet. And therefore, this could still be classified as a rally structure. Now, I was calling this a 1-2, but I have a lot of reason to believe that it's actually an A and a B pattern, which might be a little crazy sounding, especially if you're not as well versed in Elliott Wave theory, but that would fit the bigger pattern better if it's a diagonal kind of structure for the rally. So what do I mean by that? When we look at the big picture, I'm actually going to zoom out to the weekly view, because that'll give us a bit better of an idea what we're looking at. I'm going to get rid of my drawings just to make this a bit more clear. But if we call this the first wave peak, and that's the second wave pullback, that's the third. This was the fourth. That was the March 2020 crash. And that would mean we have one more rally to go. However, when you look at the internal structure, these don't look like 5-wave impulse structures. This third wave could certainly be counted as 5 waves or 3 waves, but this did not. And not only that, when we look at the internal wave structures, these don't look clearly impulsive either. I think I touched on this on my last video. So when I put my labels back on, we still have our big picture waves identified just as before. That's a first wave, second wave, third wave, fourth wave is here. And we would have one more wave to go that aligns with Bitcoin, Ethereum, and the stock market. However, the internal structures are a bit different. So you'll see with my internal labeling that the subwaves themselves look better identified as 3-wave zigzag. So A, B, C up. And here you have your wave 2. That was obviously a zigzag. And then we can count this as an A, B, and a C wave up. And the C wave itself could be counted as a 5-wave impulse. And we had a long pullback in our fourth wave. And therefore, this when we look at the last leg of the rally, it would make the most sense if our final fifth wave also takes 3-wave form. So again, dang, there's a lot more information on this chart. So forgive me for overwhelming anyone who's not used to my charts, but this best identifies as an A wave, B wave, and with a C wave left, because in a diagonal structure, each of the subwaves takes a 3-wave form. So you wouldn't expect an impulse within. So once again, A wave, which is often a 3-wave pattern, you have an A, B, C within it. And then when we look even closer, I still have this on weekly view. I'm going to make this a daily view. That should give us a bit more clarity. There we go. Hopefully that makes it more clear. I'm going to do that just to make sure everyone can follow along. A, B, C, with the C wave looking like a 5-wave impulse. A, B, and an ending diagonal for a C wave. So I got those trend channel lines drawn here, and we've basically touched the bottom of our diagonal. We pierced it a few times in both directions. And if this is the case, we should see a violent reversal. I'm going to have to take a better look at the Bitcoin and Ethereum charts. I can actually pull it up real quick. Let's look at Ethereum real quick. Does it look like a diagonal? Not as much as it does in Dash. What about Bitcoin? You could argue that could be an ending diagonal, and Bitcoin Cash, possibly. So I'm going to release a Bitcoin Cash video relatively soon as well. We'll take a better look at that. But in Dash, this definitely works as an ending diagonal. You got a 1, 2. The first wave doesn't look clearly like a 5-wave structure. The third wave is clearly an A, B, C down, A, B, C up for the fourth wave. And finally, maybe an A, B, C, A, B, C. Actually, that doesn't make much proportions. Maybe A, B, C, something like that. Not the prettiest structure, but we have reason to believe that we are done, because look at this MACD divergence. We've gone lower and lower and lower, and we get less and less and less stretch. So we like to see a divergence. We're holding that major support, and we've hit our Fibonacci targets. Everything looks like we are done, and the stock market is in a similar predicament as well. So what would I expect next if we hold for red? Well, for red, again, like I said, if this is following a larger diagonal pattern, that's an A wave, B wave. We have a C wave left to finish our major top, and C waves are always 5-wave patterns, and therefore this will very likely be an impulsive 5-wave structure. If I use the internal fibs from some of our previous rallies in Dash, then that tells me that we're probably going to have a 38 to 50% retrace off the first wave top, second wave, and then we'll probably get to the 1.764 extension. So that would be 1914. That's kind of the top of the box. We have a strong confluence at about 2237. That would be the ultimate top. But first, we need to go through the whole structure. So again, look for a first wave to get us somewhere into this green box, somewhere between 110 and possibly $198, somewhere in that range. If that takes 5-wave form, nice impulsive rally, and we have a nice 3-wave dip, that will be a great buying opportunity, because that would take us from possibly around $100, 10x from there. So exciting opportunity, but we need to see bullish action immediately. We need to see a quick turnaround. We need to punch right to the top of the diagonal trend channel. So right there, that red line shows where we're going to go. If we can break through the $70 mark relatively quickly over the next few days or weeks, that would be a very good sign we are well underway. The alternate pattern is orange, and I've actually clarified orange will only happen if we break that major support of about 34, 33, whatever that major support is. If that happens, that means that our major fourth wave was not back here on March of 2020, in March 2020. It's actually this low. So that means that our top in, what was that, January 2018 is still the third wave top. And then we had an A wave finish in 2020, B wave finish in 2021. And this is the final C wave of the larger ABC three wave correction for our fourth wave. So that means that all hope is not lost. It actually would reset our count. That would mean we have a complete fifth wave impulse coming, and it could actually project higher than what we're already projecting as is. We would very likely be projecting close to 6,000 plus, maybe as far up as 8,000 or 9,000. So again, it would cause more short-term pain. Your accounts would look even uglier than they already are if you're holding. But again, it would make for a higher rally. So I'm optimistic. This is what bottoms feel like. We're still in the stock market, fourth wave as well. Presumably, we may have a little lower to go. We may not. But if you're not feeling gutsy enough to buy right now, that's fine. Wait for the bigger five wave impulse and the three wave pullback. Again, the classic Elliott Wave 1-2 setup. Otherwise, don't do anything. Make any panic moves. And if you have too much crypto or too much cash tied into one crypto, as I've been seeing in some of the comment sections, diversify. Again, if you love one altcoin, fall in love with 5, 6, 7, or 8. The exception would be Bitcoin or Ethereum. If you have all of your cash in Bitcoin or Ethereum, that's one thing. Those are the OG cryptos. But if you have something like Bitcoin Cash, Dash, Chainlink, Solana, numerous other altcoins, I would strongly recommend and urge you to diversify. It's just like picking speculative growth stocks. Don't put all your eggs in one basket. So I'm going to have plenty more updates coming our way. And if you enjoyed my video, don't forget to give me a like, subscribe so that you don't miss anything. Till next time, thank you for watching and happy trading.